I'm Roland Grabe, Chief Investment Officer of Old Mutual Multi-Managers. And with me is the Chief Investment Strategist, Isak Odendaal. Isak, Liberation Day. It was such a dramatic announcement, but also a lot of things have changed since that announcement of so-called reciprocal tariffs. Catch me up. What has happened over the last few weeks?
And I think we should say that things might still change again. But basically what happened is that on the 2nd of April, Donald Trump announced massive tariffs on a whole range of countries, about 60 countries, including South Africa. South Africa got tariffs of 30%. So that is an import tax of 30% will be levied on South African imports coming into the US. Countries like Vietnam got in the 40s. Poor Lesotho got a 50% tariff. He then walked back after the markets kind of really responded quite negatively, and he put those tariffs on pause for 90 days. Now, we don't know what happens after the 90 days, but for the time being, South Africa's tariff is only 10%, not 30%. So that is a bit of a relief. In the case of China, however, the reciprocal tariffs got scaled up. So tariffs on China at the moment sitting north of 140%. So those are big tariffs. Potentially prohibitive, will really make it very costly for American consumers to buy goods from China. And China is the biggest supplier of goods into the US. So a whole range of things from toys to microwaves to laptops, etc., come from China, predominantly for American consumers. He then also gave exemptions to some electronics, including smartphones. So those items will not face tariffs, but again, that's potentially temporary. So the bottom line is there's just massive uncertainty. And uncertainty for markets, but also uncertainty for businesses. If you're a business in America trying to plan, trying to manage your inventory, it's just a very difficult time.
Isak, and the implications for the US, so you've mentioned the tariffs, which will lead to some inflation impacts. But overall, how do you judge the health of that economy? Do you think the tariffs, especially on China, and the reciprocal tariffs on the US in return, is that enough to push the US into an actual recession? I mean, do we see any indication yet, or does it take time to judge whether, to what degree is the US in trouble here?
I think there's definitely a risk of the US slipping into a recession. I mean, the good news, as it were, is that the US economy was quite strong coming into this episode with a healthy labor market and, people had jobs and had money to spend and so on. So that helps. It helps that your starting point is relatively strong. But this is going to be a big blow for consumers because it's effectively a tax increase. And by some estimates, one of the biggest tax increases in the last 40 years. So consumers are going to end up with less disposable income. And it's consumer spending that has been the engine of the American economy over the last couple of years. So you're basically taking your source of strength and potentially turning it into a weakness. And I think what complicates the matter is that normally when an economy starts slowing down, you would expect your central bank to cut rates. But it's going to be difficult for the Federal Reserve in the US to cut interest rates now because prices are going to go up. So it's really being pulled in two directions. And I think for the time being, it's probably just going to do nothing.
Yeah. Isak, and the global implications, I mean, with the tariff announcements, we basically saw stock markets crash down in the US, Europe, Asia, even the South African stock market sold off strongly. Then on this reprieve and this 90-day pause, we saw a lot of bounce back in various countries. But what do you think, and if you think of the different global asset classes, where are we now? And maybe just your thoughts on the US bond market as well, because that's such a critical safe haven asset, which doesn't seem to be holding up very well in this crisis.
Yeah, so I think it's notable that US-based assets have almost performed the worst. So yes, the JSE shares fell, but actually they've held up reasonably well. The rand was quite weak. We expect the rand to be weak in an environment like this. It typically sells off when there's a global crisis. But as you said, it's the safe havens, the US bond market, the US dollar, where I think the more interesting moves have happened because US bond yields, instead of falling, And remember that a bond yield and the price moves in different directions. So the prices fell, the yields moved up. That's not something that you're supposed to see in this kind of environment. And similarly, the US dollar has been falling against currencies like the euro, the yen, the Swiss franc, and so on. And again, you would normally expect that the country that imposes tariffs will see a stronger currency, but now it's seeing a weaker currency. So I think it's early days, but perhaps we're starting to see the beginning of, not just a knee-jerk market reaction, but also sort of a bigger loss of trust in the US and in US as the traditional provider of these safe haven assets. Because if the US is not going to be managing itself in a credible and consistent manner, I think foreign investors are asking big questions at this time. Which is maybe a good time for me to ask you. I mean, how do we respond? How do South African investors respond? How are we reacting to all that's happened in the last few weeks?
Yeah, so as you pointed out, not all the asset classes were impacted in the same way. And we run diversified portfolios, which a lot of people would just think of as balanced funds with various levels of risk. And our investment strategy starts off by saying, let's position ourselves in a way that we can deal with crises, that we have uncorrelated assets in the portfolio. And right now, for example, our exposure to global emerging markets have performed extremely well because these markets have been quite resilient. With the rand weakness, that has balanced risk in the portfolio well. We've also seen some defensive characteristics in our local bond market. It has sold off a little bit, but not as drastic as the equity markets. But when we think of clients and plans, for me, the most important thing is that asset management is not a challenge to time the market, to predict the future. It's rather to build a process that works well through time. So we haven't been abandoning our positions, selling falling markets. We carefully look for opportunities where asset classes or destinations for our money become more attractive. When we like that levels, we prefer to sell assets that have been doing well and rebalance the portfolio, but keeping an eye on risk.
Yeah, I mean, I think it makes sense that especially when markets are volatile, there are risks, but there are also opportunities. And I think for long-term investors, obviously now is not a bad time. I mean, if you still have a 20-year horizon in your investments, it's actually a great time to pick up, some of these investments at a cheaper price. But what do we say to people who are perhaps closer to retirement, who are perhaps in retirement, who feel quite differently about risk and volatility and get quite anxious in this kind of environment?
Yeah, it's very important that investors must align the investment strategy with their investment horizon. And what I mean by that is, if you're getting closer to retirement and you want to protect your capital, you want to start planning, you want a certain idea of how much money you will have to retire with, it is not appropriate to just have exposure, for example, to global equities or to South African equities as a single asset class. So investors, and this is best planned in conjunction with a financial advisor. I mean, very few people have the necessary knowledge to make asset allocation decisions, to work through all of this themselves. I think investors' concern is always justified, right? It is not pleasant to look at your investments going backwards, whether that's a drop in 1% or 2% or 5%. I'm not saying investors should just sit back, but the importance of a plan of appropriate solutions of diversified portfolios is absolutely key so that investors don't start making their investment decisions in a crisis. You need to be positioned for a crisis instead of reacting to a crisis. And on that note, it's really important that investment decisions should be decoupled from emotion. The market has ratcheted up fear in this environment, and we see this through the VIX measure, which shows the price of insurance against market drops. And this is an environment of fear, trying to protect your capital by moving out of the markets while they're falling or after they've fallen really is just not the appropriate strategy.
And then just in terms of the products and the investment options that are available for investors, perhaps investors looking for something a bit more conservative with a bit downside protection, just talk to us about what is available in the Old Mutual Wealth suite for investors.
Yeah, there are so many options to consider. So on the Old Mutual Wealth platform, one can access the Absolute Growth Portfolio range that has a smooth bonus structure which decouples the investors' returns from the market cycles and really smooths out. That's a very strong product in the retirement planning and even post-retirement planning space. And then Old Mutual Multi-Managers, we offer we offer a wide range of strategy fund solutions. We've got our private clients business that also built very diversified multi-asset class solutions with individual clients. And then lastly, a model portfolio range. So a lot of different options. But again, I would emphasize that it's best to plan this with a financial advisor to figure out what risk you can tolerate, what return you need, and then find the appropriate solution.
So I think the message in closing is really that it's all about having a strategy, it's working out a strategy, it's about sticking to that strategy. Do not let the market conditions determine your strategy. The strategy comes first. And effectively, that strategy should be the same as it was on the 1st of April before Donald Trump announced all these tariffs. And hopefully that strategy can now carry you through the market volatility. As we always say, it's not about responding to what markets are doing. You only really change your financial position if your own personal circumstances have changed. So with that, thanks Roland, and thanks everyone for watching.